Today on the show, we're going to be focusing on the Forex market, and I have the Executive Secretary of Financial Markets Dealers Association, Wale Abe, here with me in the studio to look at this. Good morning, Wale, and thank you so much for joining us this morning. Well, what has the money market's position been like since the Central Bank of Nigeria increased the CRR on public sector deposits from 12% to 50%?
Well, basically what we've seen is that liquidity has dried up. And of course, I think on the day of the debit, about 955 billion naira.
That's almost 1 trillion naira.
Sucked, almost a trillion was sucked up on that day. And of course, basically, because the market is dependent on supply of money into the market and then demand from the market, then we saw rates move up, in relation to that liquidity mop-up.
Okay, so now, in terms of how the naira has been affected, what's the current trend of the naira at the moment?
Well, rates, which was doing about, core, for instance, which was doing about average of about 11.5%, moved up to about 15.5%, and of course, the market is yet to settle. I mean, so what that policy effect actually jacked up the market in terms of the rate direction. However, don't forget that the supply of funds into the inflow, of funds into the market sometimes do moderate that, and so you have rates sometimes at about 14, but sometimes they get to 18 as well. So it's the market is yet to settle around a particular rate, but what you have now is a band which hovers between about 15 to 18. Okay,
but you know that the naira has been depreciating in the last couple of weeks because of various obligations that are being met by end users, both foreign and local. Now, right now, the naira is about 162 naira 10 kobo to the dollar. Has the Central Bank of Nigeria done enough to firm the naira? Because we've seen a heavy intervention from the bank in the last couple of weeks.
I will confess to you that the Central Bank has really done a lot in injecting foreign exchange into that market. In fact, their intervention, constant intervention, when it is, periodically, when it is required, has actually propped up the exchange rate. One thing I'm particularly happy about is that it is difficult for speculators to come into the market. While we've seen rates, exchange rate move up, I would say the fundamentals actually is what is driving the upward direction of the rate. You recollect that, or you could see that even the foreign reserve, in terms of value, has actually gone down from what it used to be, approaching 50, but now at 46.4 on the average.
Yeah.
Yes, on the average. And so it is, again, we must not forget the fluctuating oil price. And we shouldn't equally forget that, for instance, what you, in your news this morning, one of the things you mentioned was the stimulus, the U.S. stimulus, which is good news for our market. Because the expectation was that the reverse. So all of those, we have a positive effect on the direction of the exchange rate.
So how far do you think the CBN will go in saving the naira? Because we know that was one of the reasons it gave for keeping interest rates at where they are right now, that's 12%, and then also increasing the CRR on public sector deposits. So how far are we expecting the CBN to go in terms of stabilizing the naira?
CBN, I will expect that they have a more holistic view of the economy, and in specific terms, they have data, generated in terms of flows. I know that there is a limit to which CBN can go. If CBN at a particular point, based on what it is saying, believes that there is a fundamental reason to adjust the exchange rate, of course it will do that. But from what I have seen and from what we have now, I don't believe that we are there yet. In other words, there is likelihood that this prevailing band, will be kept, because, like we said, it's what we've as a result of when the initial announcement of was made in April,
July.
May, in respect of U.S. fiscal
US fiscal,
review,
okay.
yes. Part of, that information alone actually made some investors to start to sell down. In other words, the pressure you have on the exchange, the foreign exchange market is as a result. It's not unconnected with the fact that some investors selling down and then trying to exit the market. But with the good news, that's why I say it's a good news and good development for us. It simply means that some of those investors will likely.
So apart from that risk, what other major risks are actually, in your view, affecting the exchange rate?
Yeah, fundamentally is oil price. Secondly, with the volume of production. And when we talk about in terms of fluctuations, not much fluctuations based on the budget projections. But the issue is the volume. You discover that even the government had been so much concerned about the level of theft of Nigerian crude. So much. So, and what is lost should have been gain for Nigeria as a country. That's number one. Then secondly, unfortunately, the petroleum, the PIB, has been more political. A lot more political issues than actually looking at that bill itself. And so you have oil majors, for instance, exiting. Exiting the exploration in Nigeria. That is not too good for us, even in that industry. But beyond that, because the focus more is on oil.
Yes.
The reality of it is that I think there should be a fundamental shift into other sectors of the economy. I'm happy with what is happening in
agriculture.
Yeah, I am very happy. In the 60s, for instance, Nigeria, the reliance was not on oil, but on agri-produce. And of course, the real sector is also there. So to what extent is government, going to focus issues on that? So until we're able to diversify the base of the economy, which is largely reliant on oil today, then we may not be able to get it right with the